I wonder if Twitter is not allowing us to play the sound. Oh, it's so good. Okay. Well, here's basically what this is. I'll let you, for those of you that didn't watch this on CNBC, it's for whatever reason, I don't know if it's blocking the sound because, you know, maybe we're not allowed to do that. I don't know. Let me try it one more time. See if, I know you can hear me. Let's see if it'll, let me try it one more time and then let me know in the comments. I'll just do it right here. It's basically Cathie, her eyes bouncing around, being super sketchy, trying to pretend that she barely even knows this guy. It's, let me try it one more time. Let's see. Let me know if you can hear this. I'm not going to go to the big screen. Let's see.
Still had any capital in any of your ETFs?
Let's go. Hold on.
I wanted to ask you about Bill Hwang, who, as you know, has been in the news lately behind Archegos, and Bloomberg reported that he's a backer of yours. And I was just wondering what that meant and how well you know him and whether you've shared investment ideas with him.
I know Bill Hwang. I met him actually through a church. We were both advisors to what was called the Financial Services Ministry, younger people going through the financial services industry, especially in New York City. So that was in 2013. And on our way back from that event, we were exchanging stock ideas back then. And I know he bought into one of the stocks in which we had a high degree of confidence, Netflix. And he hadn't been involved at all in US stocks. He had mostly been involved in Asian stocks. So he was very interested, and we chatted a bit about media generally in the United States. So yes, he did provide the seed for our first 4 ETFs, and we were very grateful to him. It was at a time where market makers were sick of seeding new strategies because they'd be stranded with $2 million stuck in an ETF that doesn't go anywhere. So we needed to go out and find that seed. And Bill, hearing what I was saying about the company that I was going to start, and I did share that with everyone at that retreat, was very intrigued, and very intrigued with the stocks we were interested in. He was just beginning to learn about them. I have not spoken to him. I sent him a note after I heard about the unfortunate events that we've all witnessed.
Unfortunate. And, remember that.
And I'm wishing him well. But he was there for us in the early days, and we're very grateful to him.
Do you know if he still had any capital in any of your ETFs in recent months? Obviously, there'll be a lot of banks chasing any remnants of capital that's left.
Yeah, to be honest, I have no idea. As you know, with ETFs, we don't know who our shareholders are.
It's all fake news.
The idea at the time was
stuff.
to seed.
It didn't happen.
Never asked him if he kept the money in. If he wanted to volunteer, he might have, but no, we've never had that conversation.
Lie. Total lie. She said about 243 times. And if you watch the video, I was hoping it would do the big screen. If you watch her, she looks like a serial killer with a body, with a head in her hand, trying to explain that she's not holding a head. I mean, it's bad. Now, I'm not saying she's sketchy. I'm saying she's super sketchy. And she's really smart too. First of all, your seed investor, the first investor you ever had, you're telling me you don't know if they still have money in your fund or any of your funds? You don't know if the first investor you ever had has any money still sitting with you? Fucking lie. Oh, don't worry. We're going to go into all of it because this is a story that's pretty important. It's just kind of indicative of what's going on in the greater space. We're going to talk about Archegos. We're going to talk about ARK. We're going to talk about her. So yeah, we'll get into it right after these non-commercial break. Well, okay, so this one's not going to be it's not going to be a rant, so to speak. It's going to be a discussion, a conspiracy Tuesday discussion. It's going to be fun, but now you guys will all know what's going on. Let me say hello. Oh, no. In her case, Antonio, there is no plausible deniability. She's dead to rights caught. She's just lying, point blank. Lawyers are going to tear this shit apart. It's going to be ugly. She probably, I don't know. She may not make it out of this. And I don't just mean like maybe her funds. I mean, she might not make it out of this. Like, I don't know. We'll see. It's very interesting. Okay. Let me say hello to, where does it start? Okay. Biotech breakout, video tuber. What happens next? Oh, let's do some intro. Let's see what happens next. Claire Smith, Belinda Cook, Antonio, the real J. Cole, Gordon Bennett, SGO, TV, Sniper Princess, Frank W, S2K Hobo, Roro 80. What's going on? Hootie, what up? Surmiyanko. It's because I have to look at the new names. It's only the new names, like Cece Brown, Miso Theta, I get it. JR80, Spirella, Joe Pirate. Okay, good to see all of you. Let's go over to the WhoTubes here. Wolverine Maniac, first in the barrel. Bitcoin Candy, Joe Fernandez, ¿Qué onda? Biotech breakout as well over here. Antonio over here. And Brady, Emmanuel. Yeah, a real quick, Emmanuel, yes, there was a cool article. I've got it queued up. I was going to touch on that first before we go back to Cathie Woods, the Stanley Druckenmiller statement. TS Monkey, Kingston Dude, Lupino, Jared, of course, Dubai Money, Brandon, what up? Wood and Wet. Yeah, I know. And Archegos, ARK Investments, Archegos. I think that's accidental. Ryan, what up? Michael Murphy, Tiffany, P. Kelly, Hoop and Tony, JJ. And let's see, Ella Paul. What's going on? Jeffrey, Simon, Beztard. Welcome back, sir. Welcome back. Candace, good morning. And Jeffrey, good morning. Tony, good morning. Scott Hill, Tube Dat Pipeline. It's funny every time I say it. Fish and Magician, Todd Bishop, Steve. We're going to get them. We're going to get them all. It's like Pokemons. We're going to get all the Pokemons. Josiah. And let's see. I know I'm missing one. I saw it. TS. I saw it. Jimmy James. Other Scott. Anonymous. Al Greco. Oh, I'm guessing that's a fake one. Yeah. Let's see. Were there any crypto demands made during the pipeline hack? I don't think there were. If there were, that'd be probably good for Bitcoin. And Phil Moore, don't drive into oncoming traffic. Cass, what's going on? Okay. Now that we got that out of the way, we're going to take a quick look at markets. You guys know what happened. Everything got beat up yesterday, but not too bad, but got beat up. What's going on in the vortex? Nothing in the 90s. So so Thorchain's making its way up. Telcoin's making its way back down, but it's only down by about a percent. It actually held up really well against all the chaos. Matic is actually starting to head back up. So kind of interesting. We'll see how those play out. Nothing else looks super interesting. Power Pool. No, thank you. Elrond. It's kind of a maybe for me. I did play it. That was one of these plays that I made. It was I think it was like a 26 or 27%. So that one was in the 90s. That was a good trade. Alpha, I don't know enough about it to talk about it. Adam, what's going on, buddy? All right, cool. Anything exciting? Price change. Yearn is up to $72,000. There's a very tiny supply. So the circulating supply of Yearn is actually pretty small. Reef, Finance, DFI, Money, EOS. Why is EOS ever up? Talk about a chump trade. But anyway, iExec RLC down 15%. So finally that thing's starting to give up the ghost. And there you go. What was exciting? There was one piece of news on Bitstamp. they're adding algo, curve, and audio on Bitstamp. Kind of cool, right? So again, it's audio finding more reach. So we'll see. Okay, let's go. Make sure I haven't missed anybody. Okay, cool. Let's get over to this article. This isn't really a conspiracy one, so we're gonna go. This is just we'll go here. Okay. Let's talk Stanley Druckenmiller, and then we'll get to Cathie Wood. Legendary investor Stanley Druckenmiller, USD will lose world reserve currency status. In criticisms of Federal Reserve actions, legendary investor Stanley Druckenmiller highlighted the case for Bitcoin to replace the dollar. Yeesh. In an interview this morning with CBC Squawk Box, legendary investor Stanley Druckenmiller gave his view on the dollar stance as the world reserve currency and the current U.S. fiscal and monetary policy. Druckenmiller did not hold back in his views on what the massive amounts of liquidity meant for the bond market or the U.S. and its position as the incumbent world reserve currency. He said, and I quote, "I am comfortable with it, the dollar losing reserve currency status. That is my central case." That's a base case. That's pretty interesting coming from this guy. Bobby, good to see you. Patrick, also good to see you. All right. Druckenmiller referred to the Federal Reserve's continued monetization of the U.S. Treasury market and the effects that the yield suppression was having on credit markets and financial systems more broadly. You want to sum that up? If you keep interest rates low in the debt markets, in the government debt markets, which is supposed to be the safest place to go, then everybody has to go somewhere else to make money, and they have to take on leverage, right? If you're a pension fund and you need to knock out 7.5% a year to cover redemptions and annuities and all that kind of stuff, well, redemptions in the form of annuities or lump sum payments, then if you can only find 1.5% in the bond market, well, then you have to take on leverage. You got to get to 7.5% or you go backwards or you go bust, which is why it's like 43 of the 51 state pension funds are technically insolvent or in various degrees of insolvency. Without the Fed buying, this is more of Druckenmiller, without the Fed buying 60% of debt issued, the bond market would be totally rejecting this. I don't completely agree with him, and I'll explain why in a second. They are enabling this massive expansion in fiscal policy, and the problem is if you end up getting inflation, and frankly, even if you don't, the debt is going to be so big. That's true. Here's my thing, that the bond market, with or without the Fed, the bond market would be doing just fine. The problem is that when the Fed comes in and buys the most liquid assets and they kind of strip mine the most liquid of those assets, the most in-demand assets, it makes banks go out and try to purchase those assets again. If everybody's buying, remember, the price of a bond and its yield are inverse, right? So if the price of a bond goes down, the yield goes up. If the price goes up, the yield goes down, right? Because if there's not a lot of people in the market, you entice them with the yield going up, the interest rate, right? We'll give you more. And that entices new buyers. Well, there's already buyers. So if you're going and you're trying to make the banks legit by stripping out all the quality collateral that they would be buying anyway, what are you doing? Well, that's deflationary. That's keeping yields low, but it also pushes everyone out to take more risk because they can't make the kind of returns they used to make when you weren't meddling. So it's actually not quantitative because there's no system to it. It's just random. And it's not easing because they're not easing. Lower interest rates don't mean everyone's going to go out and take risk. It means credit shrinks and tightens. It's deflationary. It creates dangerous markets with a lot of leverage, a lot of recollateralization. Ugh, it's bad, man. Bad things, man. It seems Druckenmiller holds that the same view that many Bitcoin proponents share, that the US dollar in the current macroeconomic environment is guaranteed to debase in value. Maybe. Remember, I think people confuse bank reserves, Fed bank reserves with money, and those are not the same thing. Continuing, and that U.S. fiscal monetary policy is incentivizing individuals to venture further out on the risk curve. This is absolutely true. U.S. fiscal and monetary policy is incentivizing individuals to venture further out on the risk curve to capture returns in a system where financial repression seems to be the path selected by policymakers to escape the debt trap. They would central planners would love the idea that if they just created more currency units, then there would be more currency units floating. They would get inflation, meaning tax rolls would increase. They could take cheaper dollars and pay off the more expensive dollars. Does that make sense? You take a loan for $10, you print a gazillion dollars. That $10 is now worth $3. You collect a bunch more tax revenue and you pay off the $10 you owed with cheaper, with $3 worth of currency units that just say $10 on it, right? The debasement thing. Well, that's not a good system. Anyway, my issue here is that in the future as we go forward, if the 10-year goes to if the 10-year went to 4.9, that's calamity. That's absolute calamity. None of these rates can go over 3.5. None, zero. 3.5, it's over, folks. Like, over. My issue here is in the future as we go forward, if the 10-year goes to 4.9, the interest expense alone on the federal public debt will be close to 30% of GDP. Think about that. 30% of GDP, which we already know is financed over 50% by government spending. So 30% will be debt service. There's no way we can afford to have 30% of all government outlays be toward interest expense. So what will happen is the Fed will have to monetize that. When they monetize it, I believe it will have a horrible implication for the dollar. And that's why I said in the speech that I think it's more likely than not that within 15 years, we lose reserve currency status. Maybe not even that long. And also, on the other side of it, would losing reserve currency status be that bad of a thing? Only if you're in the debt market. With the Fed committed to continuing injecting liquidity into financial systems, that's not what they're doing. That's not what they're doing. See, that's the thing. These guys almost get it right. Even a guy like Stanley can see it wrong. When the Fed committed to continue injecting liquidity in the financial system in an attempt to keep yields artificially low, it's directly incentivizing a massive amount of capital to seek an exit. That is true. And now, more than a decade after the financial crisis, that exit valve exists in Bitcoin and is strong and more robust than ever. On a side note, the most recent Bitcoin halving was 1 year ago today. So kind of cool. So he thinks we lose the reserve currency status. I think he makes some oversimplifications, and maybe he just did that for the sake of this article, but it is interesting. Okay, let me see. Okay. Oh, Solid Gold. Good to see you. Solid Gold. Insane Club. So we're listen, real quick. You guys understand that inflation is not, if you see one thing and the price goes up, that doesn't equal inflation. Inflation is prices going up for the same goods or services on the aggregate due to more currency units chasing those same items. Okay. It's not that the price of bagels went up, therefore inflation. No, inflation is on the aggregate. Yes, there are little pockets where money is channeling in, right? The used car market and housing and things like that. Those are little pockets of inflation in relation to where they were. But if you look at net everything, we're not getting inflation. We're getting very minimal inflation. We're certainly not getting what you would expect when the Fed spends 10% of GDP to lower interest rates and you get a 50 basis point move. If it's even that, that's like being generous. You want to know more about this? Go listen to Making Sense with Emil Kalinowski and Jeffrey Snyder. By the way, they will be back on the 25th of this month, and we're going to talk about it again. It's going to be awesome. Okay. Spirella, good to see you. Soy and corn futures all up. Does that foreshadow general inflation? No, because what you're seeing in a lot of these things, remember, you turn off a factory, you can shut the power down in 1 second. You can't turn these things back on. The long example is if you look at oil refiners, let's say in colder areas. If you shutter those facilities, if you turn them off, it takes sometimes 3 months to get them turned back on. So you have COVID, things start to wind down, production starts to decrease, factories go offline, assuming we don't know how long this is going to take. We can't keep all these people on the payroll, They turn the power off. Hey, turn it back on. The world's fine again. It isn't, but even if it is, turn the power on. Okay, when are we going to be producing? 90 days. So what you're seeing right now are a lot of bottlenecks. And this is very normal as you get the economies going again all over the world, and there's various shutdowns and turn back ons, right? Openings and closures. You're getting these logistical log jams like an earthworm where it's just like, so we're getting a lot of that. So don't confuse what you're seeing right now, which most of these effects are just the inefficiencies of turning back on the global system and these little pockets of kind of dislocation and indecision. But things will slowly get turned back on. And my guess is, and we're all just guessing, is that most of these things, bro, like you're saying, lumber, soy, corn futures, all this kind of stuff, those logistical log jams will mostly work themselves back out. But still prices aren't rocketing up. They're rocketing up in certain areas where there are some logistical problems, some supply shortages. And there's also a chase for copper, right? So the chase for copper, because why? China said, we're going to go green, we're going to go electric, and copper is a huge component in the chase for green. So that's the story that's going to be told. But again, you can't look at copper and go, oh, inflation. No, because you got to look at what's going on. And when a lot of the copper producers backed out, the Chinese continued to buy copper all the way through COVID. Matter of fact, they loaded up because as prices deteriorated a little bit, they started buying. So yeah. Okay, cool. So there's that. Let me go over here because now let's talk about what's going on with Cathie Woods. All right. So I'm going to read some stuff. Sit back, relax. If you have a cigar, they smell awful, but light it up. Contradictions do not exist. Whenever you think you're facing a contradiction, check your premises. You will find that one of them is wrong. And that was from Atlas Shrugged. So these are two interesting people. This is Mr. Hwang, and this is Cathie Wood. Mr. Hwang has made a few mistakes. We're going to get into that. Cathie walks on water, or does she? So we saw the little clip, and this thing just gets more bizarre. I'm going to read you this story because it's very interesting. It came to me yesterday, and I thought, oh, what a cool, quick description of what happened, and then we'll get into the kind of the guts of it. Okay, prepare to go on a ride. Liquidity and how I would run a market manipulation scheme. In 2015, I was trading equity for a now $1 trillion asset manager. At that size, you're forced to understand liquidity. If word gets out that you're buying or selling a stock, the price can aggressively move against you. These things hold true for crypto as well. So now there are only about 10 sales traders on the sell side who understand how to execute the size of these orders. Most of these sell side traders have to hide their order management systems from the rest of the firms because of the slippage. What does that mean? If you're going to sell or buy a crap load of anything, crypto or otherwise, and other people hear about it, they're going to try to front run your trades, right? To translate, if Elon Musk was looking to buy a house in Austin, Texas, he would use a real estate broker who would keep his identity confidential. If sellers found out Elron Muskard, if sellers found out that Elon was the buyer, they would immediately move the price higher on him. They're like, oh, he can afford more. So if an order to buy 5 million shares of XYZ shows up on the sell side trader's blotter, every other sleazy sales trader will call their accounts to front run it. So does that make sense? You guys get it. People front run trades, right? And this works on the plus side and the negative side. If you see someone's going down and they have to sell, you front run their trade, you short them, you go after them. It's shooting fish in a barrel at the most part. And that's why they even call it that. Like if a hedge fund's starting to unwind and you know they have to sell everything, other people come in and bid up their stock, bid up the assets that they own, or punish them down, basically front running that trade to just take that hedge fund out because they know they're dead anyway, right? So it can get real ugly. So when there's blood in the water, man. So anyway, if an order to buy 5 million shares of XYZ shows up on the sell side trader's blotter, every other sleazy sales trader will call their accounts to front run it. Giving an order to a sales trader with fat fingers and loose lips can cost several percent in execution, the equivalent of millions of dollars. Depending on the market cap of the company and the share float, and in our case, it would be the market cap of the coin and the outstanding or circulating supply float, these orders could be multiples of the average daily trading volume. So let's just say the average order was 1 million shares, tokens of a stock, and the average daily trading volume was 4 million, meaning that 1 million represents 25% of the total trading volume for the day. So if you executed this one trade, you would have constituted 25% of the total day's trading volume. In this case, the stock would either skyrocket or plummet, depending on if it was an order to buy or sell. Okay, so this is moving the market simply because you have so much of the asset that anything you do is going to move the asset. Does that make sense? So this is where understanding a market structure comes in. And again, these things apply to the crypto space. So apply them. All right. Because of the proliferation of pay for order flow models, high frequency traders, HFTs, you'll hear that a lot, make up a large bulk of the current trading volume. Some estimates peg HFTs as 70% of daily trading volume, which basically means the prices you see on the screen are set by short-term algorithms and not long-term investors. Remember, the last price is a liar. It's an interesting quote, isn't it? And the price is always right, but the last price is a liar. Price is really the equilibrium of liquidity where longer-term investors choose to interact. If you're an institutional trader who executes trades for a firm with over 1 billion in assets, you likely understand how sensitive the market has become. Sometimes you can move a stock being just 5% of the trading volume because there are only algos on the other side of your trade and not real counterparties. So when there are robots and these robots are reactive, you can, by making these trades, the robots all basically fire into action and they start making moves. Part of this dislocation trade we've been seeing in a lot of these assets. I think probably what was responsible mostly for Ethereum Classic. Well, some of that was stupid money because idiots thought they were buying Ethereum on the cheap instead of ETH, they were buying ETC. That's different. But some of the moves that you saw like the last few days in Stellar, in XLM, part of that dislocation, that kind of bot trade. So you're seeing some of this behavior. So this phenomenon makes manipulating stocks and tokens extremely and extraordinarily easy. Exploiting shareholder floats. Now, if you're really savvy as a fundamental investor whose name rhymes with, well, we'll just call it Bill Hwang, you would take that knowledge of market structure and liquidity and pair it with analyzing the holder base of a stock. You would start investing in stocks whose float was constricted. What does that mean? Let's say that there's a lot of tokens. Let's say Bitcoin. And let's say that, or even Ethereum. And let's say a lot of those tokens were held in private wallets in cold storage, essentially illiquid. So there's a lot less. The market cap tells one story, but the float tells another, right? And they may even be counted in circulating supply, but cold stored Bitcoin, and especially Ethereum parked in the ETH2 contract, that's not liquid. That's out. It's off. It's off the table. Anyway, if the tradable shares were paltry or tokens, then the stock or token would be doubly easy to manipulate. Pay attention. It just so happens that a lot of stocks that flaunt innovation or futuristic technology fall into the low float bucket. That's because recently IPO'd tech stocks have share lockups and only a small portion of the float is tradable. So you can interchange lockups on shares with tokens locked up in staking contracts, tokens that are in cold storage, things like that. So these two are very synonymous. Also, lots of SPACs have the same share restrictions. SPACs. Chamath, you douchebag. Anyway, each incremental inflow from an ETF into low float innovative stocks creates a very convex price relationship. So How would I act externally? Well, I would probably preach the gospel of Christianity. They met at a church retreat so as to avoid being seen as a nefarious actor. Holier than thou. Especially if I was convicted for insider trading. What? Oh, yeah. Oh, it gets better. That's just sociopath and psychological projection 101. I would likely name my firm with a biblical reference that begins with ARK or ARK. Arch or ARK. Archegos, ARK Investments. That's the names. He didn't even have to make this up. This is how ridiculous these idiots are. Anyway, let's continue. I mean, I don't mean idiots. I mean Wall Street darlings. How dare I? How dare I? She walks on water. Now, what I'm not saying, I don't think Cathie Woods is knowingly a bad actor, but she sure chose an interesting bedfellow at a very interesting time. And subsequently, she sure seems like she's kind of lying about the relationship, or at least being dubious. She knows where every goddamn dollar that dude has in her company as her seed investor is. It'd be like if your parents invested in your first company. You don't think you know where your parents' money are? 8 years later? Bull crap. The ARK ETFs have not outperformed since Bill Hwang's implosion, and I'm starting to think this is not a coincidence. I grew up in New Jersey, where your bullshit meter for this stuff is fine-tuned from a young age. Something doesn't smell right here. At best, Bill and Cathie figured out that small float stocks historically outperformed everything else in a bull market subsidized by the Fed. At worst, they are in cahoots with a daisy chain of mysterious market participants who somehow avoid revealing public holdings. Gary Gensler is actively investigating this right now since Jay Clayton was asleep at the wheel. Well, listen, they've been asleep at the wheel. Look how long Bernie Madoff made it. In 8 years after being reported to the Boston SEC, 8 years it took them to bring a case against. 8 years. The bottom line, this is just what happens when you look at the price, when you keep the price of money at 0% for long enough. The markets become a joke. What's more fascinating is that Bitcoin is outperforming ARK ETF by 227% over the past year. This is a sign. Even though Cathie Wood preaches Bitcoin as a tech innovation and owns GBTC in one of her ETFs, Bitcoin has morphed into a strong inflation hedge and also a volatility hedge. Bitcoin has become the store of value for, I would say, Joe Sixpack, who can't get a yield in their Chase checking account. There's a reason Tom Brady now has laser eyes. That's not bullshit, by the way. If you guys go to Twitter and look at Tom Brady's profile, guess who has laser eyes? He's the people champ and he owns the people's asset. So anyway, kind of interesting, right? So that's just this one guy's take on it. Let's dig deeper. Let me make sure. Let me say hello to everyone. Let's see. Who do we got? Bimps, what up? Lake Hughes, Junkyard, what up? Good to see everybody. I'm glad that Theta is working today. How about that? He holds it on Nexo. He does hold it on Nexo, doesn't he? I think that's part of the thing. It's like a kind of a cross thing. Here's what probably happened. Nexo probably sponsored him. They gave him Bitcoin on Nexo as this. That's the sponsorship. My guess. I don't think that Tom Brady's a nice guy, but I don't think Tom Brady went out and bought Bitcoin on his own. He's good at many things. He's good at deflating footballs. He's good at winning championships. My guess is speculating in the crypto space, not so much. So we'll see. But good for Tom. Laser eyes. Great. He doesn't even get the meme, apparently. Okay. Brady doesn't lose very bullish yet. Okay. Let's go. Let me get this banner off the screen. Boop. Okay. Let us continue with more of this conspiracies. ARK Invests. Cathie Wood joins board of crypto firm Amun Holdings. Interesting. Now, let me do something first. Before we get into how she's now kind of trying to connect herself there, let us talk. Bill Hwang provided seed funding for ARK ETFs, Cathie Wood reveals. So this is basically what she was trying to dodge and not quite talk about. So let's go into it. Cathie Wood has revealed that Bill Hwang, this guy, the investor whose family office Archegos blew up, causing billions of dollars of losses. No, not billions, tens of billions. Why? Stupid ass leverage, ridiculous leverage. Played a central role in the launch of her asset manager, ARK Invest. Yeah, he was the seed investor. Played a central role. He was the whole role. In a television interview on Friday, Wood said that she swapped ideas with Hwang. About U.S. stocks, in particular in the media sector, back in 2013, when Archegos was still mainly focused on investing in Asia. They were at a church retreat, or so she said. Wood created ARK, which runs exchange-traded funds focused on innovative tech companies in 2014 after a long career on Wall Street at Alliance Bernstein and Jennison Associates. He, Hwang, did provide the seed for our first 4 ETFs, and we're very grateful to him. It was at a time where market makers were sick of seeding new strategies because they've been stranded with 2 million stuck in an ETF that doesn't go anywhere. It's a very interesting, very, very specific language. And I'm sure lawyers are going to tear through this shit. We need to go out. We needed to go out and find that seed. And Bill, hearing what I was saying about the company that I was going to start, was very intrigued with the stocks we were interested in. She said he was just beginning to learn about them. Right. Because here's a guy who seeds companies, who's deeply entrenched in the space. And he was just starting to learn about things like Netflix and Facebook and Google and Amazon. Yeah, it must have really opened his eyes to these novel, new, innovative stocks. Whew, it must have been mind-blowing. I got a tip for everyone. Facebook. A ferocious rally in tech shares has helped propel ARK into the top 10 of largest U.S. ETF managers, and investors have poured money into the funds. Here comes the YOLO buck. The flagship innovation fund now has $22 billion in assets. The other 3 ARK funds seeded by Hwang are its Genomic Revolution, Next Generation Internet, and Autonomous Technology and Robotics funds. Wood, and I like all those spaces. There's nothing wrong with the spaces. It's just maybe they had a market advantage. Wood, like Hwang, a devout Christian. See, this is the thing. When you start throwing up religion as like your thing, like, tell us about your investments. Well, first off, I'm a devout Christian. Okay, good, cool, I guess. But let's talk about your investments and the dude you do business with who just lost billions and billions of dollars. Wood, like Hwang, a devout Christian, who named ARK after the gold-covered chest described in the book of Exodus, said she met the former hedge fund manager when they were both advisors to a religious group that ministers to young people on Wall Street. You know, the only way they could have made that any better is if she had said young, handicapped minorities that are destitute. She should have thought through that, because she could have got more mileage out of it. Oh, and they're blind. That would have been better. Young, blind, destitute minorities that are, how could we make it even better? Oh, that are questioning their sexuality, that don't have pronouns. Nailed it. Cathie, get with me. We can work together. On our way back from that event, we were exchanging stock ideas. On our way back, I thought she met at the event. So now they're driving together? On our way back from that event, well, probably not driving. They're probably flying. We were exchanging stock ideas back then, and I knew he bought into one of the stocks in which we had a high degree of confidence. Netflix. Okay, cool. I like Netflix. You guys like Netflix. We like Netflix. Banks that acted as prime broker to Archegos suffered $10 billion of losses in late March after Hwang's highly leveraged bets on a small number of U.S. and Chinese stocks turned against him. Among them, media group Viacom CBS. When asked whether Hwang still owned a stake in any of ARK's funds, Wood said, and this is Cathie, they're basically saying, does this guy have any money in your funds? And that's where she was like, I don't know. We exchanged a note. Bull crap. Anyway, Wood said ETFs do not know who their shareholders are and added, I've never asked him if he kept the money in. If he wanted to volunteer, he might have, but no, we've never had that conversation. Lie. You know where every fucking dollar is because you have to, because if you have tainted money in your fund, the feds are coming for it. When these companies that got tens of billions of losses, You think they're not going to come to these funds and say, give me my fucking money? Please. Cathie's going to be called on the carpet on this. This ends up in federal court, guaranteed. Well, it will anyway, right? When he got unwound and his stuff collapsed, it's definitely going to, because you have a lot of creditors now. Okay, so she lied about that. Great. A number of banks are seeking compensation after suffering losses tied to derivatives trades with Archegos, which the Financial Times reported this week was preparing for insolvency. Securities regulators in Washington are probing the debacle. Wood said she had not spoken with Hwang since Archegos blew up. Right. Just the biggest blow up in the last, Oh no, we you know what? It never really crossed my mind to talk to him about it. She said, I sent him a note after I heard about the unfortunate events. Bitch, these weren't unfortunate events. This was somebody taking ridiculous risk with a whole bunch of fucking leverage. You dummy. She's too smart to be this stupid. And that's why you know something's sketchy, because she's not stupid. Cathie Woods, she's a lot of things, but she is not. She is incredibly smart. She's like one of the smartest humans. Meaning you're either smart or you're a liar. Or you're no, you know what it is? You're either you're either evil or an evil genius. So my guess is evil genius, because she's not dumb. I sent him a note after I heard about the unfortunate events that we all witnessed. I'm wishing him well. He was there for us in the early days, and we're very grateful. Okay, see how grateful you are when this thing continues to unwind. Okay, and Credit Suisse. The Credit Suisse management said that Archegos blow up will cost the bank a loss of a staggering $4.7 billion. The Archegos fallout is the second major loss for Credit Suisse in recent times after the collapse of Greensill Capital. If you own stock in Credit Suisse, it might be time to get out. At a time when most of the investment banks have prospered, Credit Suisse has been battling one issue after another. The latest crisis, the collapse of its client Archegos Capital Management, had once again raised doubts about the lender's capacity or capability to manage risk. Yeah, I'd say so. Credit Suisse management said the Archegos blow-up will cost the bank a loss of a staggering $4.7 billion. This comes close on the heels of the losses sustained at Greensill, a supply chain leader, which is in liquidation and at the same time in the middle of a political scandal. Credit Suisse said it will provide more information on losses sustained due to 4 Greensill funds in a few days, according to a report on The Guardian. Okay. Changes in the management. The Swiss lender quickly swung into action, launching a major shakeup in its executive ranks. Brian Chen, CEO of Credit Suisse Investment Bank, and Laura Werner, the Chief Risk and Compliance Officer, will step down from their posts. Bye. See you later, Brian and Laura. Hey, at least it wasn't sexist. They chopped some heads off, but it was male and female. Well, actually, we can't say that. We don't know their pronouns. We don't know how they roll. 2 pronouns not yet determined got their heads chopped. Anyway, the bank has announced Thomas Gottstein, the chief executive of Credit Suisse, said that Archegos' loss was unacceptable. Oh, no, you will accept it. It's not unacceptable. You lost 4.7 on fire. Bye. Maybe Thomas needs to go. Adding that it and Greensill had led to significant concern. Yeah. Following one crisis after another, the bank now finds itself under tremendous pressure to persuade clients and shareholders to continue reposing faith in it while it attempts to corrective measures. Would you let them manage $1 for you? You guys realize what happens if you have a margin account at Credit Suisse and they suffer systemic loss? You suffer systemic loss, sucker. And then guess what you are? You're just one of a bunch of people holding a note. They owe you the money, and so what? They go into insolvency. You're at the very, very bottom of the capital stack. You owe nothing. It's an IOU. They say, sorry, we had to make up the losses somewhere, so we repledged your collateral. Well, did you repledge it to pay off the debt? No. We repledged it to make the debt. That's what we loaned. We loaned out your capital. That's what happens in margin accounts, by the way, as a side note, sidebar. If you have a margin account anywhere, shut it down. Shut it down now. If you have any margin accounts, your equity, your assets Even your cash that's not in the account, if you have an account tied to it and you have any margin account at any one of these places, they can take all of your money and repledge it and recollateralize it. Did you know that? Do you guys know that? All of it, every fucking dollar gone, and you have nothing to say. If you have margin accounts, shut them down. Tell them, cancel my margin account. I only want a cash account, and get it in paper that you no longer have. Don't just take money out of the margin account. Don't just think that if you don't use margin, if you have $100 million and you have a margin account and there's $2 in it, they can now take $100 million and $2. It doesn't have to be in the margin account. If you have a margin account, go read Reg K. Go read all about Reg K and what they can do. They can repledge that. They can take that, collateralize it, repledge it, and they can go gamble with your money. It's legal. Yep. Okay. The spying scandal. The financial blowups of Archegos Capital and Green Seal are only the latest stories in the list of troubles that have battered the Zurich-based institution. In 2020 February, a spying scandal rocked the bank, resulting in the resignation of its then chief executive officer, to Jane Tiem. Listen, if you're involved in Credit Suisse, when you have dirty fingers, every single thing that they touch is tainted. All the fruit is tainted. Dirty tree, dirty fruit. Just because the fruit falls and it rolls downhill and you pick it up, oh, I'm going to eat it. You're dead. Who is it? Who's the little princess that ate the thing and then she's waiting for a frog to kiss her, or some old stupid that I'm probably mixing a few. According to reports in 2019, it came to light that detectives followed an executive who quit the bank for another institution. Similar reports surfaced in December about another executive being followed. Time acknowledged that the spying row had caused a disturbance at the bank and was replaced by Thomas. So here's the deal. When executives would leave, they would send out a team of basically their own little intelligence officers to follow these people around, to keep track of them, make sure, they're not doing dubious, sketchy, spurious things. The Luckin collapse. Last year, almost at the same time, Credit Suisse was hit by the Luckin coffee collapse in China after an accounting scandal. The company said its chief operating officer and some of its employees had colluded and fabricated about, $310 million in sales. That never happened, according to Bloomberg report. At the start of 2021, the lender was forced to write down $450 million of its investment hedge fund York Capital. Whew. So, man, if you have exposure to Archegos, you're already screwed. Credit Suisse, you're probably screwed. Green Seal, you're already screwed. If unwind your margin accounts, people, shut them down, turn them off, and make sure you get something in writing that you no longer have margin account. Because even if you just unwind the margin, you still have the account open. They can recollateralize or repledge your assets. All of them. Back to ARK. So what's going on now other than her dodging, federal probes? ARK Invest Cathie Woods joins board of crypto firm Amoon Holdings. The CEO of ARK Investment has joined the board for platform Amoon Holdings. In brief, Cathie Wood, CEO of ARK Invest, has joined the board of Amoon Holdings. Wood has also bought millions of dollars worth of Coinbase shares in recent weeks. She got crushed on that. Anyway, CEO of investment firm ARK Invest has joined the board of crypto company Amoon Holdings. Per report published by Bloomberg yesterday, Woods joined the Amoon board after personally investing in 21 Shares AG Operators, which specializes in exchange-traded products, ETPs. 21 Shares is forging a new path for crypto ETPs by leading with research and a keen understanding of this developing asset class. Well, if that's the case, Cathie, how come you haven't made a fucking dollar ever since the Bill Hwang blows up? Because apparently there was some magical dust that he was offering, some part of the formula that you no longer have now that he's not a part of it. I wonder what that is. Maybe it's just bad luck. Or maybe she's not doing something that she was doing when he had been doing the things that he was doing with potentially proprietary information. Did I say that? Was that out loud? Did I besmirch? Oh, I besmirched. The besmirch happened. What is Amoon Holdings? Good question. It's a crypto firm and ETP provider based in Zurich, Switzerland. The firm currently has approximately $2 billion in assets under management, a sharp increase from its March 2020 figure of $27 million, according to CEO Hani Rashwan. The firm is also profitable with an annual revenue of up to $50 million being generated from a mix of institutional and retail investors. I can't keep doing it because my mouth will twist. We built the company to make cryptos accessible as stocks and have seen tremendous demand for our products. 21 Shares Short Bitcoin ETP is one of Amun's offerings. It allows investors to bet against Bitcoin. In turn, 21 Shares Crypto Basket Index tracks the top 5 cryptocurrencies by market value. Amun and 21 Shares are listed on exchanges in Switzerland, Austria, and Germany. Amun plans to list its first non-European product in the coming months. According to Bloomberg, this expansion might see as many as 30 products established in 8 countries. This isn't Wood's first involvement with the crypto industry. According to The Block, she's bought a total of $356 million worth of Coinbase shares, first purchasing $246 million on April 15th, and then buying another tranche of shares worth $110 million on the following day, meaning she's gotten gutted for about 40%. Lit on fire, boys and girls. Yeah. So Archegos, very interesting. And now you guys basically know the story. You kind of know what's going on. Pretty interesting, right? So let's see. Do you have a URL? Oh, I don't know what that is. Okay. Let me go over here to the comments because I wasn't seeing them. Let's go away from this for right now because we get it. There's all sorts of interesting conspiracy afoot. Yes, look, man, even if she's not directly dirty, you can't not know. You can't not know. You can't say I'm really smart and really stupid. Nope. You're smart and you knew, or you're dumb and you're lucky, and she's not dumb, right? She's incredibly well educated. She does get markets, maybe not as good as we thought she got them. You know, it's like do as much as you can and then get an edge. What's your edge? Maybe Bill Hwang. Maybe in order for Wood to succeed, it needs a Hwang. Every Wood needs its Hwang. You can't, matter of fact, you can't have Wood without Hwang. It's impossible, right? It's like matter and antimatter. They come together, an explosion. You can read into that. So yes, Wood with no Hwang has massive implications. We can get a lot of mileage off of this. Yeah, listen, I'm not telling anyone to sell or buy or do anything. I'm just telling you to be very careful who your friends are. And a lot of people bet on her products because it was a bet on her, because she is incredibly intelligent. But if you know someone's incredibly intelligent, they can't play stupid. And if they start playing stupid and tens of billions of dollars start piling up, maybe you want to get to the sidelines and just wait it out. Just let the smoke clear, because since Archegos blew up and the Hwang is gone, she's been getting mutilated in the markets. Fucking mutilated. This is beyond face melting. You know what this is? This is the kind of face melting when, to carry the pun, they opened up the ARK in Indiana Jones and all the Nazis' faces melted off. This is that. Only the Nazis were her accounts. She's getting flummoxed right now, real bad. So I would just be cautious. I would be cautious. Tainted limitless pill. It's only half working. Yeah, I know. Oh, I took the bad one. It just makes me want to eat steak. I took the limitless steak pill. I just want steak. Okay. So the digital shekel. That's good. So anyway, yeah. Now you're kind of in on it, and it's very interesting. The Hwang and the Wood, Archegos, ARK, this whole religious bullshit. I mean, man, just be very careful. But again, be careful where you put your money. don't buy into memes unless the meme has crossed some chasm. Because again, you know, Leroy and I actually had a really interesting show last night on the Discord where we just talked about, and Leroy had done a lot of really good research on, you know, memes as a way to pass down kind of these cultural ideas, and, you know, what makes a meme work and doesn't, what makes something go viral and doesn't. You know, that's a formula that none of us know. And I kind of, it's, you know, it's like looking, when are we in a bubble? Well, we don't know exactly what a bubble looks like, but we know when we see it. It's the same with pornography, isn't it? There's sex and then there's pornography, right? So it's the same kind of thing. And so I would just say to everyone, be careful that you're not buying into something. You don't want to be buying into anything. You want to have a base case, a thesis. Stanley Druckenmiller, he has a thesis. He's acting on that. And your thesis is yours. And what happens is you continually adjust it and audit it and look for flaws that might detract or deter you from good decision making. That is critical thinking. And you can't ignore these memes, these cultural kind of movements, but you don't want to be chasing price. You don't want to be chasing the meme. You want to be seeing these things and understanding how might they affect the future. Is this a tradable event? Is this an investable asset? You know, this and that. Anyway, Bims asks, one question. How much would Cathie Wood have to chuck if Cathie Wood would have chucked wood? 17. Okay. Have a great day. Stay out of trouble. Feds love laying wood. Let it Hwang. Let it Hwang. Let it Hwang. You know what? Antonio, you just won the internet. You just won today's show. If I had Jerry on, I would say, Jerry, what is our guest won? Anyway, he won the internet. He won the show today. Have a great day. Stay out of trouble. Don't do anything by pouring solvent, drunk, strung out on meth, smoking water, eating that hash, you know, cranking lewds. Grandmother wouldn't do. And man, she is floating. She's on that angel dust today. So, angel dust.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need to cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the drop. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet. Hey, you talking to the Prophet.